let us get started, everybody, with the company. Oh boy, AB. What's it called? AB InBev, which also owns the company Anheuser Busch, which has Bud Light as one of the brands, as well as a bunch of other companies. Now, before we actually get started with any of this, guys, I can hear myself in the echo again, Mike. Before we get started with any of this, full out disclosure, I don't drink. Period. Like, I hate alcohol. I hate the taste of alcohol. I think it tastes like AIDS. And don't ask me how that tastes like. But I just completely despise alcohol with a passion. I don't drink beer. I don't even drink soda. Yeah, guys, like, I do not drink any form of alcohol. I don't even like soda. So right then and there, I don't really care about anything that's happening with anything here. I've never tasted a single one of these beers. I hate them all. Now, Mike, you're a profound drinker, Mr. Polish.
I've partaken in Land Shark and Stella Artois. Those are the two ones I know. The rest I don't.
Yeah. I literally only know Budweiser and Bud Light. That's it. Aside from that, I don't know anything else.
I think Bud Light is piss beer. So that's my own take on it.
Listen, man. To me, they're all piss beer. Let's just keep it. Let's just keep it 1,000. Let's just keep it 1,000. If it's not water, it's piss beer. So. Yeah, guys, I personally have like no legion when it comes to any one of these beers, so let's get started with this. Now, for anybody who has been under a rock, Anheuser-Busch has had quite a controversy these past couple months, couple weeks, actually starting Q2. And well, we actually have our first kind of, I guess, realization from the CEO, where the CEO just said today, too early to have full view of Bud Light backlash impact, says AB InBev CEO. So the backlash was, guys, and again, this is a financial channel. I'm not going to go further into this, just what I'm about to say. The backlash was that Anheuser-Busch decided to use Dylan Mulvaney as a spokesperson. Sure. As a I can't know what to say anymore. There you go. Yeah. What'd you say again?
Spokesfigure
for the beer Bud Light. Okay, and for anybody who doesn't know, Dylan Mulvaney is this very, very controversial, very, very polarizing. That's the word, polarizing figure. Where I'm not gonna go any further. Y'all can look up the name Dylan Mulvaney or just look up Bud Light and you'll see who Dylan Mulvaney is. And people after the commercial with this person showed up and just started boycotting. Bud Light. And if you guys, I'm not going to say my opinions of it, but if you guys have heard my previous comments in regards to pretty much anything on this channel, y'all know where I'm leaning towards when it comes to the boycott, right? So do with that information as you will.
And also, and the other thing is, when you drink beer, like whichever side of the argument you land on, you don't drink beer to engage in politics. You drink beer because you want to forget everything else. You don't want to be reminded of politics. You kind of drink beer to avoid it.
So it's not. So I'm gonna have to change something or fight you on something that you said there. It's not about politics. It's about culture war. Okay, it's about the culture war that's currently happening.
Or you drink beer to get away from the world. You don't drink beer to go to the world. Right.
So Dylan Mulvaney, very, very polarizing, came out, didn't even know what March Madness was. I know what March Madness is, and I don't even drink beer. So, pissed off a lot of people, and the boycott just started, to the point that they're losing a lot of money. Now, the thing is that this happened in Q2, so we have not seen the effects yet of this backlash, right? We have not seen the effects yet of the backlash. We're going to see it in August, essentially. Sorry, not August, July. And actually, yeah, technically August, because it'll be the second month. So yeah, it'll be in August when we see the backlash when it comes to all of this. Now, that's essentially what's happening with this. A lot of people are like, no, there is no impact. And a lot of people say that, no, there is an impact. Again, we don't really know. Apparently, if the CEO...
The argument I would make is, based on the comments, it's too early to have a full view. You really don't bring that up if you don't think there's an impact.
Exactly. You really do not bring that up unless you know it's an impact. Because let's face it, they're seeing these numbers right now. They're seeing these numbers live. The CEO, of course they are. The board, of course they are. So apparently I've heard rumors that around like 26% of their revenues just completely collapsed because no one's buying. And by the way, it's not just a boycott of Bud Light. It's a boycott of all InBev products. Period. End of story. So it's massive. It's not just Bud Light. It's not just Budweiser. It's pretty much the entire company.
it's fiduciary responsibility. He can't ignore the subject and not if it's creating a negative impact, or because here's the thing, if it was creating a positive impact, the CEO would be basically saying, like, touting its
Screaming at the top of the lungs.
successes, touting its the advertisement, and they would word it in a certain way to not really just say like X, Y, and Z.
Yep.
But the fiduciary responsibility requires him to basically kind of hint at or give forward knowledge of things that are happening in the future, or his perception of the future. Because here's the thing, you make a very polarizing statement or polarizing act, as I would say, and it has some associated consequence or benefit. So you have to let investors know it's your responsibility. That's why they call it fiduciary responsibility. So he doesn't have a choice in not mentioning it. He can word it different ways, but he has to mention it.
And a lot of people have been saying, you know what, we are not going to buy any more InBev products anymore unless Anheuser-Busch apologizes. So this is not an apology. So unfortunately, we'll see where this leads. But that's pretty much all that I want to talk about when it comes to this whole backlash, guys, because at the end of the day, this is a financial channel. We're here to make money, right? We're here to make money. And depending on what happens here, well, it might actually serve as a pretty decent opportunity to buy this company. Now, again, there is no such thing as moral investing, so just keep that in mind. I personally don't drink alcohol, but some people drink alcohol, they want to invest. Some people don't drink alcohol, they do want to invest. It really just depends as to where your moral line is, and that changes person to person. So with that said, let's now jump into their earnings, because they did have it today. And we can see that, EPS normalized estimate 78 cents, EPS GAAP estimate 86 cents, revenue of $16.07 billion, two total revisions. Okay, two total revisions, one up, one down. So not really, 50-50. Now, in regards to their earnings report, here we go. In regards to their earnings report, this one is interesting to say the least. This is the first time, by the way, I've ever covered Anheuser-Busch, or just this company in general. So I have no idea what in the world I'm going to see here. So let's take a look at this. Our business momentum continued this quarter, delivering a 13.2 increase in revenue through combination of both volume and revenue per HL growth. Mike, you drink alcohol? What does that mean?
Line per run. I have no idea.
I don't know what HL means. Probably some alcohol term, I don't know. And an EBITDA increase of 13.6%. We continue to invest for the long term, and these results reinforce our confidence in the resilience of the beer category, the effectiveness of our strategy, and the strength of our platform to deliver consistent, profitable growth. So again, guys, this was before the controversy started to happen, okay? Just keep that in mind. All of these numbers are before that happened. The whole controversy started, I believe, like the beginning of like April. So just keep that in mind. So we got revenue of, revenue up 13.2%. And by the way, this is just more than the Bud Light and the Anheuser-Busch. This is the entire company. So we got revenue increase 13.2. That's a 15% increase in combined revenues of our global brands, Budweiser, Stella, our toys, Corona, outside of the respective home markets. So essentially international. Approximately 62% of our revenue through B2B digital platforms, with the monthly active user base of BEES reaching 3.1 million users. Over $100 million in revenue generated by our digital direct-to-consumer ecosystem. Total volume was up 0.9%. Total volumes grew 0.9% with own beer volumes. With own beer volumes up 0.4%, non-beer volumes. Oh, okay, I see. Let's see over here. Normalized EBITDA up 13.6. Underlying profit. What is that? 1.3 billion, I believe. Yeah, that's 1.3 billion.
Yeah.
Yep. Underlying profits. Normalized profit attributable to equity holders of AB and InBev, excluding the impact of hyperinflation, was $1.31 billion in Q1 of 2023 compared to $1.2 billion. Okay, that's a pretty decent increase. That's an increase of what, $100 million in just 1 year. And lastly, underlying EPS of 65 cents. So remember what it was? It was 78 cents. So they missed. They missed when it came to the EPS. Very, very interesting to say the least. All right. Do we have anything else here? Because I've never taken a look at the earnings report. So this is like the first time I'm looking at them. Well, actually, we got over here. 2023 outlook. Oh boy. Overall performance, we expect our EBITDA to grow in line with our medium-term outlook between 4 to 8% and our revenue to grow ahead of EBITDA from a healthy combination of volume and price. The outlook for fiscal year 2023 reflects our current assessment of inflation and other macroeconomic conditions. Again, before the controversy began. Keep that in mind. Net finance costs, which by the way, guys, when we take a look at this in Q2, which I do plan on looking this in Q3, looking at Q2, let's see if they mention anything regarding the controversy. Net pensions, interest expenses, and accretion expenses are expected to be in the range of 200 to 230 million US dollars per quarter, depending on currency and interest rate fluctuations. We expect the average gross debt coupon into fiscal year 2023 to be approximately 4%. Effective tax rate, whatever. Net capital expenditures, we expect net capital expenditures to be between $4.5 to $5 billion in US dollars fiscal year 2023. And that's pretty much it. The rest is just a consolidated statement. We pretty much just took a look at this. You know, we got the revenue of, actually, look at this. Q1 of 2022, when it comes to the revenue, 13.235. And then in 2023, 14.2. Okay, nice increase there. Anything else? Do we have like the net income? I wonder. Don't really see it. But guys, again, if you guys would like to read this for yourselves, the link will be in the description below. Now, let's head over into the calculator. We got the ticker for BUD, market cap of $115.3 billion, a P of 22.63, with a current share price of $65.90. Now, taking a look at this graph, guys, we can see that on the 1 year, they're up 9.2%. Year to date, they're up 9.6%. Now, a lot of you may be saying, I thought there was a controversy, right? Why is your stock price still going up? Well, let's face it, we haven't seen the full impact when it comes to people boycotting their whole entire brand, right? We haven't seen the full controversy. We haven't seen the full impacts of that because that has started in Q2, and Q2, well, we just started the second month of Q2. So it's going to be a while till we get those numbers, but we'll see where that leads. Nonetheless, though, it's still up more than 10.5% year to date. In fact, 52-week range, guys, is $44.51 to $67.09. So we are at very, very near all-time highs, or at least 52-week highs. It's very, very interesting. So right there, it's already unappealing from a financial standpoint. Now, they do pay out a dividend of 82 cents. Didn't know that they pay out a dividend. So let's take a look at this dividend, shall we? 82 cents ends up being a yield of 1.3%, payout ratio of 25, a 5-year CAGR. Look at this CAGR, Mike. Look at that 5-year CAGR.
Ouch.
So they've cut this dividend in the past, probably because of, actually, we're going to take a look at that. One dividend growth year. So they desperately cut it like rather recently. So looking at the year, guys, looking at the growth, at the dividend history, sorry, we can see that this is just a mess. There's nothing here. And in fact, look at that. Oh, wait a minute. Look at this. They cut it, and they used to pay it semi-annual. Look at this. And then as of 2021, now they're starting to pay it annually. So only one time a year. That's interesting. That's very, very interesting. So, okay, I don't really know where to put that. But even still, though, look at that. Look at that massive drop. Going from 2018 all the way down to 2019. No stock split either. So, yeah. Wow. You would think that they would increase it during COVID because people were probably drinking a lot more. But, yeah. That's very, very interesting. So, very, very risky dividend to get involved, in my personal opinion. Ex-dividend date actually was yesterday, as of May 3rd. Payout date is going to be on June 8th, and they pay their dividends annually. So, only one time a year. Back into the calculator, we can see that based off of the current shares outstanding and this 82 cents in dividends, guys, they pay out $1.63 billion in dividends every single year. In regards to the 5-year average free cash flow, after this is paid, they have left $7 billion. Last year's free cash flow is $6.5 billion. These payout ratios, I don't like the fact that their last year's free cash flow is lower than the average, but the payout ratios don't seem too bad. It's essentially less than 20%. So not too bad in my personal opinion. All right, Mike, your turn, buddy. Ready to rate these graphs?
I'm ready to downgrade these graphs.
Well, I mean, so far we're only looking at the net income. We got 5 years ago of $4.37 billion. 1 year ago
to me, it's like
20,
30.
Hang on. Let me finish. Increase of 37%. Listen, man, to people who are listening, right? As an increase of 37%, what would you give this a grade?
25.
25?
I don't like negative trend. I don't like the staggerness of it.
I just don't understand this.
Yeah, during COVID.
You would assume
That's the weird
people
thing.
would
It's
be
like everyone would be cooped up inside.
drinking.
Yeah.
So I don't understand why that turned like that. By the way, is the live chat is working, right, Mike?
Yeah.
Just one. Okay, cool. All right, looking now, guys, at the free cash flow. We got 5 years ago of $9.9 billion to 1 year ago of $8.14 billion. That is a decrease of 18% with an average of $8.64 billion. Again, I don't understand this 3 year ago value. I really, really don't. Not to mention the 4 year ago value makes no sense either when it comes to this. So what would you put this as a grade? It's decreasing.
I like it's decreasing, but it's
And you
I'm
can
stuck
tell
between
yeah.
that it's not like horrendous, but it's not good.
Right.
So it's almost like a 45 or a 50 because there's some redeeming qualities, but it's also not great.
Right. No, I feel you. I mean, you can definitely understand this 2 year ago value because that's coming off of COVID, right? And that's when things usually you see the drop during COVID and then the following year, boom, spike. So that's understandable. And then the coming down back to earth 1 year ago, right? So yeah, 45%. All right. Not bad. I know Samuel Adams stock took a hit in their seltzer market. Do they own Samuel Adams? Mike? Alcohol expert?
That is what should we call it? Not Anheuser Busch on Samuel Adams.
I don't drink alcohol. I don't freaking know. This is the first time I look at this company.
If you know it, if Samuel Adams and Anheuser owns Samuel Adams, refresh my memory if you know.
All right. So Dave, can you do that? Can you do that favor for us? Thanks, buddy. We're gonna continue on with the revenue. We got 5 years ago of $53 billion to 1 year ago of $57.8 billion. That's an increase of almost 9%. What do you think about this one?
3 years, that's COVID, and
Right.
it's going up. So it's a positive graph. It's like 95, 90 to me.
So I just looked it up. Samuel Adams is owned by Boston Beer Co.
Okay, so
There you
two
go.
separate
So it's
entities.
not. Yeah, it's completely two separate entities. Yep. In fact, the ticker's
that's
Sam.
weird that beer companies would take a hit during COVID.
That is weird. Because you would think people being locked out at home and gloomy, you would think that like alcohol would be up, right?
Yeah.
So that's interesting. All right, so
It's like the one thing you could afford,
Right.
Or the one thing you could get a hold of.
Right. I mean, yeah, I remember the whole controversy being like, alcohol stores need to be open. I remember that.
Yeah.
That was hilarious, by the way. So what would you give this a grade? Because I did not hear you.
90 to 85. That's where I'm sitting.
I'm always going to choose the lowest one. You understand this, right?
Yeah.
Because assuming the lowest one, if it passes with the lowest, then it'll pass with the highest. So,
Yeah.
looking now at the assets minus the liabilities. Surprising. This is looking very, very steady. Very, very steady. In fact, their outlier year was only 4 years ago. Interesting. Separate company, Sam is the ticker. Yep. Thank you, Dave. So we got over here. This is looking increasing. A little bit of an outlier year 4 years ago. Average assets, it is $221.3 billion. Average liabilities is $139.15 billion. Doing this difference, we get $82.2 billion. Would you give this a grade?
90.
90? All right. 90%. Cash flow minus the liabilities. What do you think about that graph? This is the first time we've seen this, man. This is the first time we've seen a graph like this, I believe. So, I mean, getting closer and closer to zero every single year. Not 1 year did they miss.
I would say 100 because it's trending in the right direction. Or I take that back. I would say 90 because it is negative, so it's not something you necessarily want to see negative, but it's heading in the right direction.
So here's my take on this. I would give it 100. Because at the end of the day, it's heading in the right direction, right? You don't expect to be in the positive. I've only seen like 2 companies ever have anything here be in the positive. Very rare. So I'll take the W if it looks like this. In fact, look at the 1 year ago value. Negative 120.5 billion. Average, negative 137.2. To me, that's 100.
Yep.
To me, that's a complete 100. So I'm going to veto you right here, buddy. Let's see. What did Rich say? Closed bars Restaurants and large events.
Yeah,
cause
that
a
makes
drop
sense.
Yeah, it does. Okay, yeah. I take that
also,
back.
I
Yeah.
think small beers are taking market
Also, I think small brewers, Mike, come on, man, speak
brewers,
English,
sorry,
are taking market
share
share
from bigs.
from the
Yeah,
bigs. Yeah, okay.
yeah.
Crap.
And I live near like 5 or 6 different microbreweries, so yeah, I can attest to that.
Mike, could you attest to this one? Craft beer is way better than the big brands.
Oh yeah, all the microbreweries, but beer is better, like 100%.
I really wish I could have an opinion on this. I really, dude. I grew up with one beer, and that was the one that my grandpa, bless his soul, always drank. His favorite thing was Heineken. That was like his thing. Like he did not drink anything that wasn't
bad
Heineken.
Heineken is.
That
is trash beer.
Listen, man. Again, I don't drink alcohol. You know me. You know me. It's awful.
You see what I gotta put up with, guys?
It's awful. I think it tastes like AIDS. I told you already. It's absolutely disgusting. So,
you see, hey guys, throw a like down on the video for my pain and suffering to have to deal with this one.
And you're Polish, so like you drink like spiritus, like it's water.
Yeah.
You give me Smirnoff and it hurts. You give me Smirnoff and it hurts. 0.01% alcohol. I just start crying because it's just
Asian
I just can't.
glow on steroid, guys. Just remember that.
I don't like alcohol. I really don't. Anyways, we got the shares outstanding. Man, we should really just have a live stream of like where we just talk about like ourselves. But anyways, we got, guys, now the shares outstanding 5 years ago of 2 billion shares to today of, okay, let's be more exact because it's pretty much the same. 5 years ago of 1.956 billion shares to today of 1.984 billion shares. It is an increase, but it's only 1.38%. And from the previous year to the current year, there's an increase of 0.14. This is very steadily increasing. Very, very constant. So, grade. Mike?
Let's see.
I saw that Rich put something.
Yeah.
Obviously,
yeah. Let's see. It's increasing, so it's below 50 for me. Oh, is it consistently increasing?
Yep, it's consistently increasing.
Yes, but it's not increasing by a huge percentage, so it's not in the 10s or 20s. So I'm gonna go in the middle, 35.
35. All right.
What would you put?
I would put like 40. Yeah, I would be like in the same ballpark. I'll be like in the same ballpark. I would say like 35%. So yeah. And lastly, when it comes to the cash equivalents, they currently hold almost $10 billion with an average of $10.3 billion. Now, before we move on to the weighted grades, Rich says, can you guys put together a high dividend stock portfolio consisting of your top 20 picks for long-term investing? I think that would make a great video. So here's the thing when it comes to that. I could do that. That's not really a problem. And it would just mainly be up to me to do that. The problem with that is you have different ways of dividend investing, right? You could chase yield for starters, or you could chase CAGR. One of those, you could do one of those two, or you could do like a mix of both, right? Because I mean, you have companies like Altaria, right? The cigar company, massive yield, but it's not recommended for younger people because most likely, let's face it, the whole smoking thing is kind of running its course. It's not really picking up, right? So like at least with the younger people, it's sort of dying out. So that's one company that would be in a dividend portfolio. Let's move now into the overall grades, guys. We gave the net income 25%, free cash of 45%, revenue 85%, asset minus liabilities 90%, cash flow minus liabilities 100%, shares outstanding of 35%, overall grade of 58. Where do you see the main problems here?
Mainly it's their free cash flow and net income.
Net income, yeah, and the
shares outstanding is killing it too.
It's not killing it. It's just consistent, and it's. I mean, you know what? At least you can expect it, right?
You can plan around it.
You can plan around it. So, guys, here is now the part that I love doing. And again, I have not done this company ever. So whatever numbers we're going to get, I'm not going to put in the numbers. And we're pretty much just going to stay away, or at least try to stay away from the whole controversy. So whatever numbers we get, it is what it is. So let's put in some revenue and predicted share buyback assumptions. Now, without inputting anything, guys, look at this. Not adjusting for debt, $37.25. Adjusting for debt, this thing goes down to $7. So they have a ton of debt in compared to that cash and equivalents. They really, really do. So that is rather interesting to say the least. With that said, we got over here the growth, guys. Forward revenue, 6.28%. And again, in regards to their earnings report, they grew revenue at 13.2. Now, take into account the controversy, right?
Oh, yeah.
People are boycotting it. We don't know the effects yet, but through the grapevine, we have heard that revenue has dropped like 26%. So, again, this is in the next 5 years. So, this is not this year. This is not quarter over quarter. This is in the next 5 years. So, this is a difficult one. This is a difficult one. Go.
Let's see. They did 13% as this quarter, and sector median basically is
the same.
7.
It's the same as it's the same. Yeah.
So let's see. So let's just assume their maximum is going to be, and I want to say, let's say 4% per year times 5 years. That's
20.
Their max, like your stretching max, is like 20%, but
Okay.
they're going to take a hit. So it's basically, I would cap it at 10% for the high assumption, because you're most likely going to take a hit from the boycott, just because boycotts usually result in lower demand of your product. So there's going to be a hit. You don't just know what it is. So it's almost like you want to do like 15% to basically cap it, because you're going to it'll fade, right? You'll fade with time, because like time will basically heal the wound, as I will call it.
Yeah.
And then like do 10 and 5 for the revenue growths.
So 10 and 5.
Yeah.
All right. Good. And now for the projected share buyback. I think this is
What was there?
pretty easy.
It was
Yeah.
like 1%
Let me
or
bring that
something
back.
like that?
Yeah. It's 1.38. And again, very consistent. Pretty much. So
So pretty much like
assume the same in the next 5
Yeah.
years. So
low -2, -10.
yeah.
They're not gonna buy
Yeah,
back shares
yeah.
because it's like,
Yeah, I see that. And guys, with this, we get the target share prices: $43.54 to $62. Interesting. Very, very. These numbers, honestly, I could see these numbers. I really, really can. Target share prices now, adjusting for debt, it is $13.82 to $31.65, with a margin of safety of 5, 10, and 15. This is $11.75 to $30. Now, I can actually see these numbers. I actually can. I would actually change this. I would change this to 20. This is mainly for me. I would change this to 20. I would just bring everything up by 5. I would say this at like 15. And then I would change this to like 10. That's just what I would do. I think the predicted share buybacks are pretty on par. I think that's pretty, I think that's what they might do. But mine are between $51.59 to $72.54. Not adjusting for debt, and $22 to $42. And then with adjusting for debt, and then with a margin of safety of 5, 10, and 15, $18.59 to $40.11. So in both scenarios, we can see that the median assumption gets close, not adjusting for debt, and the high assumption is telling us that not adjusting for debt, there's also a pretty decent buy at that point as well. So yeah, it really just depends on what you put when it comes to this one, and it really just depends as to what the effects of that boycott's going to be, right? It's just it is what it is. It'll be very, very interesting. We will come back to this company in Q3, of course, looking at Q2 to see what the effects actually were. And we can even bring back this live stream or the video and see how it will change, right? We can do that as well. So very, very interesting, guys. Please have these calculators, make your own assumptions, put your own grades as well. Every investment is a present value of all future cash flow, not financial advice. Now, looking at this dividend, okay, $5,725. This nets us an annual dividend of $71.24. Not worth it, in my personal opinion. On top of that, it's been their dividend. I mean, we saw the history. When it comes to the dividends, all over the place, right? It's all over the place. I don't like it. So, yeah, it is what it is, though. I think this is a company, me personally, I would wait up until the controversy ends with this thing. So, yeah. Mike, what do the technicals tell us?
So, if you couldn't pick a worse time to enter a controversy, good or bad, is when your stock got right above the 200 weekly moving average after you spent nearly going back to 2018 under it. You guys all know my opinion about the 200 weekly moving average. If you're below it, you're basically bearish, and don't buy the company until it gets back above it. Case in point. You broke down below it. You took a, let's say, 37% haircut, and you spent the next 3 years trying to get back above it. You got rejected once, twice. On the third time, you push up. So, price is starting to curl back up. You could almost see a high volume spike right here. Obviously, probably around when they announced the controversy. But however you take it, the earnings reaction was positive. So if they can basically get above the swing point of $66.49, I do think they have some appreciation actually. Not moral investing. Stop looking at it from a moral standpoint. Just look at what the charts are telling you. So if we basically say this is an A to B pattern, completing around the $71.62, which coincides with one of our high assumptions. So as you can see, the calculator and technicals are kind of showing you a similar pattern right here. Now, what I do like is that the 50 daily moving average is pushing back above the 200 weekly. So it's showing short-term price is turning bullish and above the long-term price. Now, what I don't like is when that next earnings report comes around, and what is going to be the reaction to the stock, and is it going to crash below the 200 weekly moving average? That's where, by investing in this company now, you play that risk, because if you go below that, you're basically you're going to repeat the last 3 years of continuous decreasing in the stock price, which could bring you down to a very low evaluation. Now, at some point, especially COVID lows, you were down in the $31.58, which is near our low assumptions. So you can pretty much, I would say, if you want to make it as simple as possible, you break the white line, which is basically your double bottom connect from 2022 and 2020. You break it, you're probably coming back down into the lower section of back probably to the COVID lows. Or as simple as you can make it is, if you want to buy here, and if you guys are excited to buy the company, I personally am not, just because controversy, there's some things that are kind of just showing weakness, and it's not a time that I want to see controversy in a company. I basically would wait for either a 50 daily moving average retest and a hold, or possibly a retest on the 200 weekly. If you get back down to the 200 weekly, I don't believe it will hold, especially with how the company is just going around. However, you do have that A to B pattern to the upside, so you could definitely play the upside. To me, once you break $67 is an easier upside. Now, just jumping over to Lux Algo, just to give us a little more detail. The weekly definitely has room to run. MACD has diverged from one another. You do have a divergence on the weekly. However, it still hasn't basically curled back down to form that secondary peak to top out. RSI has pushed up higher, so kind of leans away from the MACD divergence actually occurring. However, on the weekly, you are getting into overbought territory, so we have to jump over the daily just to see what it's kind of telling us. And you kind of see a different picture on the daily. This will probably create a MACD divergence on the daily. However, it has plenty of room to cross over and run. You have a lot of room to the upside for the overbought territory on the daily. Companies can stay overbought on the weekly chart for a very, very long time before they come down even slightly in value. So definitely with this company has the ability to run. Now, you do have a zone here sitting at the $67.62. So basically, if you're buying here, you have to be aware that you're going to start hitting resistance around the $66.81 all the way up to $68.19. So maybe I'll wait for that push up, wait for the pullback where you make a higher low. So anywhere above $62.96, maybe to the localized peak here of $65.92 on the retest. And basically you would have a push up, reject off the zone, come back, retest, and then push up higher, just because you would have completed that zone. So overall, it's basically looking at a area of possible resistance that I want to see the retest off of. Afterwards, you definitely could make that runner to that A to B pattern sitting up in that $72 region, which would probably take you into the next earnings, where you take your profit, wait for the earnings, and just see how the whole controversy or lack thereof, maybe a controversy affecting their earnings, is going to be. But just things to keep in mind when looking to where to buy this company. On the monthly, I always like to look at this, is where you do have room to run on the monthly, but again, you're going to start topping out at eventually a point. Again, I think that $70 is definitely going to be an area that you're going to be topping off at. And again, if you're buying this company had a big sell-off. It's got in history from 2018 all the way down to 2022. So you're going to have a lot of zones that are going to basically be areas of pullback that every time you hit it, they're going to have a pullback until the second time that you retest it. So just be aware of those things when you're investing in the company. Like we said, there's no such thing as moral investing. Case in point with the company, it has charts that are looking appetizing, fundamental calculators showing a variety of opportunities. All you got to do is wait for the opportunity and basically capitalize on it and leave your morals out of it. So that's what I got for you guys today.
Fully agree with that. Fully agree with that. And we should definitely do like a video regarding the whole concept of moral investing. I've done one here on the channel, but it's been a while, and I didn't have as many people and I didn't have as many subscribers as I do now. So we may actually cover that topic in the future, honestly, because I think it'd be a pretty interesting topic.
Just to comment on moral investing, it's the same thing about admitting when you're wrong. It's like people just want to have this idea that like there's moral investing and the world has to revolve in this exact point. It's like the chart don't got to do anything, the stock don't got to do anything, and just take your opinion out of it.
Pretty much. So, guys, I think that'll pretty much do it for, was it AB InBev? So, thank you all so much for watching. Like, if you like, comment, subscribe. It really does help out with the algorithm on YouTube. You guys can follow us on YouTube sites. Link is in the description below. We didn't have anybody on Rumble today, but you know what? We had 20 people watching yesterday, so I think it's, I think it's fair. Thank you so much for, I believe at one point we got 12 people watching on YouTube. Right now we currently have 6. So thank you so much for everybody watching. We really do appreciate it. Of course, 8 likes. That's a lot, guys. Thank you so much. We really do appreciate it. Every like we love it. We really, really do. So starting next week, we're not going to stream anymore this week. There really isn't anything that we want to do unless you want to cover AMC. Maybe we could do that. And that one's going to be quite an interesting one to do. Maybe we could do it like this weekend or something if you want. Like on a video, not on a live stream, but like on a video. It's up to you, Mike.
We'll have to see, depending on how life goes around with stuff.
That's fair. So yeah, guys, we're not gonna stream anymore this week. Most likely not. And next week though, we are going to stream on the 10th. You know what the 10th is, right?
CPI Day.
CPI Day. It's gonna be crazy. So get your not Bud Light, Coors Miller, or whatever other disgusting alcohol, whatever people drink. I don't know. But guys, we're gonna be live streaming on the 10th. See what CPI is, and we're either going to laugh, cry, or all of the above. So
or bang our heads into a wall.
Right, and this is why I would love to have like a live streaming thing, like face cam kind of thing. So that way I would have like a flipping chair camera or like a flipping desk camera, and then I would just go flip the desk whenever like I get mad or something like that. I think that'd be hilarious. But yeah, guys, we're gonna cover the CPI tomorrow, next week on the 10th. So be back on the 10th for another live stream. If not, you know what? We're gonna be putting out videos pretty much throughout the whole entire week, like we always do. So thank you so much. Really do appreciate it. With that said, guys, peace out, and we'll see you all in the next video / live stream.